Hello, everyone. Thanks for joining and welcome back. Our guest today is a very good friend, Jeffrey Tucker, the founder and president of the Brownstone Institute and the author of The Market Loves You, Why You Should Love It Back. Welcome back, Jeffrey.
Good to be here. You always call me on the right day, it seems like.
You know what? I'm happy I call you on the right days because everything that's happening in the markets right now is absolutely crazy, especially geopolitically. I wanted to get you back to talk about everything that's happening, in the gold markets, everything that's happening with the geopolitics in the country right now. But first, let's start off with gold. Last time we spoke, gold was a lot lower than it is right now. What the heck is happening?
Well, it's exactly what every gold bug has ever said happens, which is that everybody flees to gold. In the end, it's the most stable, the most guaranteed value, the protector against everything. In the end, gold is what sustains the world. I mean, nothing's going to change that. Bitcoin's not going to replace it. As even though I wondered if that was ever going to happen, but things happened on that front that I didn't expect. So in the end, yeah, it's all about the gold, all about the silver, and it doesn't surprise me at all to see that is the place that people are drawn to, given the uncertainties of our time.
Yeah, absolutely. And a lot of people have been talking about, oh, is it due to Trump's tariffs? Is it due to like the uncertainty? What are your thoughts on Trump's
Uh,
tariffs now?
okay, well, you ask me what do I think about Trump's tariffs right now, which that will change in 2 hours. Um, uh, uh, as your listeners know, I'm not one of these people that just says the trade deficit means absolutely nothing. It means a lot. It means the dollar supremacy has not worked out for American manufacturing. We're a debt-ridden country that has decided to shut down all of its manufacturing and just become debt-based consumers of the world's product, and then over the course of 50 years massively ballooned labor costs while having a dollar supremacy, which just from an accounting point of view it means we can't make anything and sell it to anybody. So now the US has two exports of natural resources, namely oil, natural gas, and so on, and then also financial services, meaning debt. So that's what we do. It's pathetic. We
Yeah.
were once a great manufacturing country. We decided to kill that starting in 1944, but then it really accelerated in 1973. And we've gone through 50 years of seeing one industry after another die, and suddenly we're in this existential panic. Oh no, what are we going to do? We don't make anything. Well, the way to fix that is to lower the costs of doing business. I mean, that just makes sense. If you want to fix it, you need to revalue the dollar relative to the other currencies so that everybody doesn't benefit from exporting to the U.S. obviously, and then you need to free up the markets and deregulate, end inflation, and watch the domestic currency valuation rise in purchasing power. That's what should have been happening for the last half century. We wouldn't be where we are today. Tariffs are not going to fix it, despite all the arguments that they can serve as a proxy for currency settlement. There's a bit of a leap in that logic there. I've read all the papers. And it's the kind of thing that works well in models, by a Harvard economist. But the people who are advocating this thing, they're academics, they're not practitioners. The incredible thing that's happened since Trump's bought the tariff belief structure and doctrine, hardcore, and he has for a very long time. And by the way, again, his concerns are not mistaken, all right? And in a sense, God bless him for drawing attention to the problem. But the solution that he has is not the total solution. It's maybe not a solution to anything except maybe our revenue problems.
Right.
But the funny thing is that now he gets to try out his theory, right? And the Congress used to control trade, now the presidency does, and he's a happy camper. Yippee, here's my tariffs on this, on this, on this, on this. China's not going to get away with, you know, funneling its product through Vietnam, not if I, as long as I'm in charge. And what we've discovered is something interesting, that that I don't think people fully understood. The problem with tariffs is not so much that it hits the consumer because they apply to the wholesale prices, mostly. It's not even a
Right.
consumer issue. In fact, it's intriguing to me that the real-time inflation rate has not gone up at all in light of the inflation, despite all the mainstream media warning about this. We've not seen any evidence of any price increases, at least for now, overall. But what it's doing is hurting retailers and wholesalers. It's the inputs to our existing business sector that are being slammed by these tariffs. So it's not even, again, it's not the consumer so much as it is the wholesalers and the businesses and the small businesses that rely on imports for their retail sector. So who's it helping? I mean, it's not helping anybody, but if it's going to help anybody on the margin, it's going to help big business as opposed to small business. And we're learning that now in real time. So we're seeing this play out. So even Trump has backed off from the most extreme aspects of his seemingly mercantilist or autarkist agenda, just because of weird things going down in the bond markets and the financial markets, and also his opinion polls. So he's pulled back on that. Now he's like going after China. So I don't know. I mean, maybe there's a deal. He's going to force China to buy a lot of our leftover crap from the Midwest, the corn, the soybeans, and all the rest of the nonsense that we try to fob off in the world. China would be better off just buying a ton of it and dumping it in the ocean, actually. And maybe that'll solve the problem. But I think that the markets have kind of tamed his ambitions to some extent on the tariff war front for now. We'll see. I don't think he's going to let go of the bug because my mentor, Murray Rothbard, had what he called Rothbard's law, which is that everyone specializes in what he's worst at. And we can talk about what that means, but what it means in practice is that you can have a person who's great on every subject on the sun. The one thing they're stupid and bad on is the thing that they're going to, sort of pursue. I mean, it's a strange empirical law that Murray laid out that applies
Right.
to most scholars and statesmen. But in the case of Trump, he's always had a bug in his ear about this tariff thing. Now he's just pursuing it to the point of destroying the world trading order.
And now a message from our sponsor, Juggernaut Exploration.
One of the more exciting ones, I think, is Juggernaut. I know some people say, well, lightning can't strike twice, and but look, I think one of the things you got to reflect on is that some of the guys who work here at Juggernaut are some of the same geologists that basically found and have now advanced sherbet at Goliath, okay, over the past years. So they have a very different way of thinking about exploration in the Golden Triangle than most other geologists, okay? And they've gone out and they've identified what could be another sherbet type target here. And the size of these veins is absolutely jaw dropping. My hunch is these guys are onto something pretty special.
The link in the description is right below for Juggernaut Exploration. Now back to the episode.
Which kind of deserve to be destroyed. So on one hand, that's okay. I don't entirely mind that. And if the ambition is to strike a bunch of bilateral agreements, we might in the end be better off. I mean, you can imagine a scenario under which this doesn't lead to total calamity. If we get a revenue tariff and that ends up replacing the income tax and we have bilateral agreements instead of the World Trade Organization, overall, that might actually be good for the cause of free trade, as implausible as that sounds.
Mm.
All right, so we've talked that. Is it okay if I make some comments now on the GDP for today?
Absolutely. Yeah, absolutely.
Okay, so everybody's kind of waiting for this. I certainly was. And on days like today, I just uh, refresh my phone. So it came in at negative in real terms. Uh, Less negative than the Atlanta Fed is forecasting, but still negative.
Okay.
What was fascinating about today's numbers is that they revealed not so much anything very interesting about the real economy. What it revealed is that the GDP numbers themselves are a massive disaster. They haven't really changed in their composition since the 1930s, so they're catastrophic. Uh, there are a number of problems with them. Is that they count exports as output and imports as negative output. So anything you import is considered not productive, not meritorious, not contributing to your national greatness. And anything you export is, which is a weird assumption that, John Maynard Keynes, baked into the data from the 1930s. So that's one dumb thing. Another dumb thing is that government spending uh, it counts just the same as if it's consumer spending. So government purchases uh, count as output. So you see
Right.
where we're headed here. So if you have a situation like in World War II or during the COVID period where government spends like trillions and trillions and trillions of dollars out of nowhere, just like ballooning, well, that's going to register as economic growth, which is dumb because government doesn't have resources that it doesn't extract from the private sector. It should be negative. Instead, it's positive. So,
Right.
uh, so during the COVID years, we seem to have economic growth. Wow, it's so great. We're all lazing around at home watching Netflix, and the economy is growing all entirely on its own. Look at the numbers. Well, that just reversed itself with surprisingly, and it seems not quite believable, but government has pulled back on purchases since Trump took over. I mean, apparently, Doge is having a real effect. So government purchases just collapsed in the first quarter of this year,
Wow.
which is amazing. Amazing, right? This is huge news. It's glorious. And surprisingly, this is the incredible thing, uh, U.S. payments on its national debt actually went down for the
R-
first time in 6 years.
Really?
Yeah, so we're seeing, this curve go up, 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 and then slightly tilt downwards. We're paying out less of interest service on the national debt. So, and this is all changes that's happened. And of course, the ding experienced by government employment means that there's fewer government purchases and cutbacks on U.S. AID and so on. It's actually having a real effect. But so that's all great news. It's amazing. But as far as the grumpy GDP is concerned, this is negative for economic growth. The second thing that really harmed the GDP this month is again reflective of what a stupid piece of data it is. So, in anticipation of Trump's tariffs, we saw an explosion of imports. Like every wholesaler, every retailer, anybody, every a manufacturer who needed a machine part or a this or a doohickey for this or that, bought enough to last the next 2 years. They went into deep debt, buying all the things they needed as much as they possibly could. This was the stockpiling months of the whole of January and the whole of February.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking.
Causing the U.S. trade deficit to reach historic depths. I mean, like we've never seen anything like it. You can look at the charts. Trade deficits never it's not looked pretty since about 1976. But what happened in the first quarter of this year is like nothing we've ever seen. So this all happened in anticipation of Trump's tariffs. So Trump's tariffs are designed to reduce the trade deficit. Well, of course, law of unintended consequences. They cause it to balloon like we've never seen
Oh,
before.
that's crazy.
It's crazy, but look what that does to GDP. Slams the GDP. So the imports dramatically ding the GDP down. So that's another factor that leads to the illusion of onset of recession.
Wow.
And there's the third factor is that you have to adjust the GDP by the inflation numbers to make them not nominal but real. Inflation was roaring in January, and you do a year over year with those CPI numbers, and they look terrible. You bump them up against terrible GDP numbers anyway, nominal GDP numbers, and you end up in a negative territory. So those are the three factors that lead the data to indicate we're experiencing a dramatic decline in output. I'm telling you, it's probably not true. We might actually still be in recession, but the recession began in 2020. We had a brief interlude. It deepened in 2022, and we've been in recession ever since. But the numbers don't show that. You see what I mean? So we're overestimating the productivity of the past, and now we're underestimating the possibility that we're actually recovering from it. And it's all due to these statistical illusions.
Yeah, it's pretty crazy. Like you, especially the law of unintended consequences. Like what happens with trade deficit. I find that mind blowing.
Yeah.
But Jeffrey, I want to thank you so much for coming down to the community to speaking to everyone. Every time you're on, seriously, it's a breath of fresh air, and I really want to thank you for coming down. I'm gonna put your links in the description below so everyone can connect with you. But yeah, when you come on, I'm happy I catch you on a good day.
Well, it's you. I don't know what it is. I think you just have a good sense of timing. You always ask me on the right day when the news is big, and it's wonderful, and you're a wonderful interviewer. So I appreciate it.
Oh, thank you so much, Jeffrey. Well, I'm so grateful to have you on and love to talk to you in the future.
All right. Thanks so much.
Take care.